Hey, I'm Jim Duffy, and welcome to your Mortgage Minute. Hey guys, Jim Duffy, and today I want to explain a very important concept that's affecting the entire mortgage industry and a lot of buyers, and that is why are loans tightening up so much and credit scores going higher, etc. And like for example, I've got several pre-approved buyers who 2 weeks ago were pre-approved and now they aren't because the product has gone away. And I want to explain what's happening. And to my industry friends, first of all, I understand the technicalities of this. We could go in the weeds. That's not my intent. My intent is to make it as simple as possible so that the average person who's just out looking to buy a home and doesn't really care what the mortgage industry is all about can figure out why they can't right now. And then who can, right? So what's happening is servicers service loans, right? Here's the working of a loan. Someone comes to me, I do the pre-approval, goes to my underwriter, we approve it, we close the loan. We then sell the loan to a servicer, or we sell the rights of the loan to a servicer. They don't own that loan though. That loan gets bought by Fannie Mae, Freddie Mac, Ginnie Mae, or some other aggregator. So there's several steps. So the servicer though, let's say they have a whole bunch of loans like this. They've got a jumbo loan, they've got an FHA in there, they've got just a whole bunch of loans. Each of these pieces of paper represents a family who has a mortgage, who has a loan on it, right? Well, what's been happening is a couple of things. Rates have dropped so dramatically, and now they've gone up a little bit, but this is why. Because out of this stack of loans that they had, that's their net worth, right? And they've got several stacks of these, a whole bunch of loans. This group of people decided to refinance. And so they're no longer in the books. They went with a different company, they refinanced. This group of people just lost their jobs and now they're going into forbearance. They're not going to be making payments, so there's nothing coming in to collect. Or worse yet, unfortunately, I think some of these may end up in losing their home into foreclosures. So suddenly they had a stack of $1 billion net worth in these loans, and overnight almost it's worth $500,000. It just got cut in half. So it's kind of like what happened to these lenders is kind of like what you and I would look at if our home value suddenly dropped a lot and our 401k just got cut in half. Our net worth just got cut in half. Well, that's what happened to these lenders, right? And there's the uncertainty of we don't know how long this is going to go on. We just don't. Lenders are reacting in a couple of different ways. Some are saying, you know what, I've lost too much net worth. Oh, by the way, they can't lose too much net worth because the law says they have to have so much in order to lend. So they do one of two things. Peace out, I'm out of this game, done lending, no more servicing, etc. And some lenders have chosen to do that. And I get it, I understand it. If you and I were in that situation and had to make that decision, we might do the same thing. Others, of course, have said, no, we're going to keep this game going because we've got to make money to recoup our net worth, etc. But we don't know how many are going to lose their jobs, go into forbearance, go into maybe foreclosure even. So we're going to reduce our risk a lot. So what they've done is said, we want the cream of the crop. The riskier loans with the high debt ratio, right? It's already kind of risky because you're paying out so much of your paycheck every month to that mortgage. It's too high a debt ratio. And the lower credit scores, because the lower the credit score, by definition, by statistics, they tend to default at a more rapid rate. So FHA is still out there. It's a little shaky at the moment. VA is still out there. USDA is still out there. But they are not doing the 580 credit scores anymore. No one is. I don't think anyone is. If they are, they're the only game in town. Because lenders don't want that much risk. So therefore, that's why realtors are seeing it. I've talked to several who have seen it. I've talked to buyers who I sent pre-approval letters for. I had to call and say, not so much right now, because they want higher credit scores, lower debt to income ratios for all loans, because that has the least chance of default. Now, it could still all blow up. If this thing keeps going for a long time and a lot more people end up losing their jobs and a lot more people can't make their payments or go into forbearance and don't make their payments, it's still a risk. You see what I mean? So if you and I had to make that decision, I think we would make one of those two decisions. We'd be like, no, out of the game. I'm not doing this game anymore. It's too risky. Or we have an appetite for risk. We think it's measured, but we're not going to go too far out on that limb. We're going to keep it to the things that have the most probability of performing so that we can increase our net worth again. Does that make sense? So what do we do in this environment? It's work on credit. I have an excellent credit repair company. It's funny to see it, but a 639 credit score is not a bad score, but it's very difficult to get a loan at that right now. So a lot of people are doing credit rescores. So credit repair company, mycreditguy.com, I'll put it in the comments, is who I recommend because they're very effective. Sam Parker started it, great guy, very, very effective at getting your credit score up. So I think that's one of the planning things to do if you're looking at buying a home in the near future. If your credit score has taken a hit, it's kind of on the lower side, that 620 range, I think it's going to be difficult for a while going forward until all this shakes out and lenders get back on their feet as far as a net worth that's kind of similar to what they were a month ago. So if I can help, let me know. There's still lending going on, lots of it. Lots of people buying homes, even in the jumbo space. It's still out there. It's gotten a little more restrictive, as you can imagine, but it's still there.